We're going to be live. Yeah, there you go. All right, so Grand Rising. Let's get straight into it. I'm just going to go have a look and see what's going on. So today is non-farm payroll. Okay, there is non-farm payroll today. We know that this has a huge dramatic effect on the markets, and it's very, very possible the markets may do absolutely nothing until after this time. Okay, they may just decide to do the hokey cokey until after this time. Okay, now let's have a look at yesterday we was expecting to see a bearish candle, all right, to see a bearish day. Okay, and we got an inside day of this candle actually closing within this candle here. Okay, so remember when we was going through that concept of understanding the previous days and the previous highs and the previous days lows, I said at some point that changes. Okay, and it wasn't a better time for it to change and decide to have an inside day than yesterday. Okay, because today is non-farm payroll. All right, now let's go and have a look. Let's go and look at a few different pairs. We'll have a quick glimpse at gold before we start breaking down. Let's get rid of this. Before we start breaking down our GUs and our US 30s, etc. We have a quick glimpse at gold quickly. Similar with gold. Okay, we're seeing that. Now remember what I said to you in regards to, I said that even though we have that, bias based upon previous days and previous days highs and previous days lows, can you remember me saying that, look, we still have to go by structure? And I'm going to be a bit concerned whether or not the next day here is going to be a big bearish candle outside of this structure, outside of this trend. Okay, and as we can see how the gold market came in here and decided to respect this little orange trend line. Okay, this little area of potential demand. And we had some of these slightly, green days. All right. Now, none of these days have closed outside of the high and the low of the previous range for the past few days, from about Tuesday, Wednesday. Okay. So again, you can see how this non-farm payroll is having an effect on the markets. All of the markets, not only this. Have a look if we go back to GBP USD. You can see how we've got an inside day in here of the market just trying to work out what it wants to do today. Let's go and have a look at some. Let's have a look at, I know somebody just was talking about Japanese yen was doing some huge moves, doing some wild moves. Have a look. All right. So I'm going to hit remove and we're going to break down Japanese yen. All right. Just because it's a market that, even though, of course, when the United States of America sneezes, everybody gets a cold. However, it's slightly outside the realms of, red folder USD news. Okay. So looking at this market, Gorgeous, bud. Kids are leaving. Anyway, all right. So as you can see here, all right, we can see that the market is trading within this point and this point. Okay, the market's within this range. Though this is a huge range, we do understand straight away that the market's within that range. Okay, so if I was to draw a box, the market is trading within here. Okay, I'm not going to leave this on because it's going to muddy my whole picture. Okay, or if I do, I'm going to really fade it out until I'll totally fade it out, and I'm just going to give it a border. All right, so the market is trading within that range. Okay, now we can see that since I'd say 2020, all right, COVID, because this is COVID 2020, all right, we can see this market being extremely bullish, all right, just simply making higher highs and higher lows, going to the moon. All right, now let's knuckle in there. Go to my daily chart. That was the weekly, just so I could get everything on the screen. Okay, let me fill this screen also. Okay, now have a look. Now we can see the range a little bit better. We can see what the market's been doing a little bit better. Okay, and remember, I make it very, very clear every single time. these lines that we draw on the screen are just a guide for our eyes. They're a guide, so when we go down to the smaller time frames, we still remember what the market's been doing. These lines do not mean that when the market comes and touches these lines, we are just going to hit the button buy or hit the button sell. That's not what that means, okay? And that's why some people get quite confused. It's like, oh, it's gone past the trend line. So it doesn't mean that, it's a guide. As easy as these are lines, they could be zones. They could be boxes, like bigger ranges. They're just an area of interest. So I can see that this market has been trading within this range, and this big push here has broken some substantial structure. Now, what could possibly happen after this huge break of daily swing structure? What could possibly happen? What could possibly happen? Possibly. Anybody know? Anybody know what could possibly happen?
Possibly go back up and close the imbalances it made yesterday.
Possibly, yeah. Possibly could retrace, make a correction. Okay, we can see a big breaker structure M, you know, on the daily time frame. And the market might decide to come and push all the way back up into here, into some levels. Okay, we haven't seen a manipulation M with this side shoulder right. What do I mean by that? I mean, there's two types of M's. Okay, M patterns. You have this one. And this is just, you know, branching over and sharing education again. And then you have this one. And this is one that is a little more interesting, and we expect after that to happen for the market to retrace back up into the golden zone kind of area. Yeah. Around kind of 618, between 618, 86 kind of area. All right. We expect that to happen. All right. When we see these manipulation M's, this is something for you to think about, something for you to remember. We can go into deeper into that whole strategy. Do that next week. Okay. All right. Now we can see this market's pushed down here. Now we haven't closed on the daily time frame. We didn't close outside of this wick, but we definitely wicked outside of this wick on the daily time frame. On a smaller time frame, we're probably going to get candles that did close below that level. So this is the 4-hour time frame, and we got 4 hour. We didn't actually get a 4-hour closure. Also, we got wicks past that level. Okay. Either way, I'm going to draw some lines in here. Either way, we are expecting to see some sort of retracement happen in that market. Okay, now where might that retracement go if we're turning around now? I'm going to take this because we haven't got no definitive breaks of 4-hour structure yet. Okay, I'm going to pull from here to here, and you can see a 50% level that the market has identified. That 50% level is right here. Let me thicken that up. That is a 50% level right in here. Okay. And in and around that area, we can see some points of interest with the market, like the price. Have a look at that point of that level of interest. Have a look. We kind of like the price. We like the price. We kind of like the price. Kind of like the price. Kind of like the price. This is a nice price. This is not too bad. We don't mind buying at this price. We don't mind this price. This price is okay. Yeah, it's not about the price. Yeah, we're enjoying it. We like this price. Okay, it's a price point that the market seemed to have enjoyed. Yeah, seem to have respected. Okay, so I'm not trying to say for sure we're coming back here. I'm saying this is a point of interest. Let me tell you something in the markets. In the markets, nothing is for sure. It's all theory, conceptual, probability. So what that means is when the market comes back into this area, that's when I'm going to be doing my rock eyebrow and thinking to myself, what's going on? And I'm going to be then waiting for. What am I going to be waiting for? Somebody speak to me about what I'm going to be waiting for. Somebody speak to me about what I'll be possibly waiting for. I'm going to be waiting for a break of structure, some sort of indication here that the market is actually having a reaction from this area. Okay? And if we do see that, then I will be getting in, all right, on the basis of this energy here. But let's have a look on a larger time frame. So we can see the market is a bullish market in a larger time frame. Yeah. But potentially, if we think about pinging and ponging, all right? If you remember the ping pong, all right? The market we can see here is pinged, it has ponged, it has pinged. We're potentially expecting a bit of a pong, all right? The ping pong. We're expecting a potential bit of a pong. So therefore, we're expecting a potential retracement of an overall bearish market. That's what we're expecting. So if I do get in a trade for a sell, I understand it's against the trend of the overall larger market trend. That's what I understand. I understand that before getting in. All right. On a 4-hour time frame, as I mentioned, if we are turning around now, potentially the market's going to be pushing up into this level before turning around. Now, I have some options available to me. The options are, because this market on a 4-hour time frame has broken 4-hour structure, I'm going to try and clean this up and get rid of that line and get rid of these dots. Yeah, you get my point. Okay. Now, you can go. All right. Now, because this market has been breaking 4-hour structure, all right, breaking some 4-hour minor structure, we can see in here all of these little levels in here, all of these little levels in here, all right. These are all, and that one there would be a major level for me, all right. So if I was to touch some data points from here to here, that was the impulse that market pushed up in. Let's make that blue. In fact, let's make it a solid line so we can actually see it. That was the impulse the market pushed up in, okay? And prior to, and an even sharper impulse was here to here is a more relevant impulse. Now, why do I say it's a more relevant impulse? This is a more difficult question. Why do I say this yellow impulse here is a more relevant impulse? Somebody tell me. It's a bit more of a complicated question. And if somebody answers it well, I'll be impressed. Why am I more interested in this yellow impulse over here and taking that impulse's structure? Does anybody know? If you don't know, say you don't know, so I can answer. If you do know and you're just trying to get your fingers warm, to press unmute.
Is it because it had around 3 strong pushes?
No, not personally. That's not my reason for it. No. It's not. I'll give you guys a clue. You want a clue? You want to phone a friend? Want a 50-50? Want a clue? Do we want a clue? So the clue is this. Does that help? Does it help? It doesn't help? Someone's still saying I don't have a clue. I'm not gonna. We're about to win a new Tesla on a holiday to Caribbean. Go on.
Is it because it broke outside of the structure, captured the liquidity?
No, that's not the one I'm going for. It did definitely break outside of that impulse. Yes. Maybe
last low before the high.
Oh, there you go. It's the last high before it's the low. But yes, I think I'm going to give that to you. New Tesla's on its way to you. What color do you like? Yeah. And what Caribbean island do you want to travel to? Yeah. Let me know. Yeah, let us know and we'll get it sorted out in the office. All right.
Yeah, don't worry, bro. I will.
No problem. Now look, guys, this market, now I've rewound it. Maybe it makes more sense. Okay. This market was pushing up bullishly, right? It was a bullish market in here, and we identified some data points by touching, this line over here. It's not the greatest of lines here and here. Okay, and we just kind of slap this on the top of some data, the highest data point that we can see as the top of the structure. All right, just like this, strapped it on this little line in here. Okay, now, when this market came all the way to this pinnacle, something changed like this. Look, the market A broke the structure of that push. It's the only information we had. It broke this structure. This was the last high, a low before this little high. It broke this structure and price broke outside of the market. Yeah. And since that point, it only made lower highs. So this is the last high. Yeah. So structurally, these levels here, and this would be more like a swing level at the bottom of this, touching this yellow line. is the most important structure. The market ultimately is trading within this level and this level here. As if we're taking this for a swing kind of level. Yeah, now it did definitely break structure in here, and personally when the market broke, okay, retraced, you could have been looking for your entry here on a smaller time frame. Could have been looking for your entry here at the small time. Why? Because this was the indication. Remember, these are 4-hour candles. There ain't nothing to be sniffed at. They're 4-hour candles. Yeah. So when we've seen the market come up and touch the top of our range, and look at the tops of the range that is touching. This is why we draw our trend lines in. It's touching the top of this bigger range here. Have a look. And it's touching the top of the impulse range. It actually surpassed it here. Actually gave a little push past it based upon the way I've drawn the lines. All right. So the reality is that market, and we don't have, and we could this line is irrelevant. We could put this one in here like so, and have a better angle. Could do. All right. We could have probably a better angle the way I've drawn this one, ever so slightly better. Okay. So but the whole point, this is in a danger zone. This is in potential premium level, expensive level, which we were expecting to see people selling off from that level. So when we see a 4-hour break of structure, this is structure. If you can't see it, turn to your line chart. This retracement here that stopped here and pushed up creates some level of structure. Okay. You hear other educators just talk about, having a free candle, a wick lower than previous wick either side of it as a structure, as a swing low. Okay. When I see this 4-hour swing low being taken, boom. I could have been this is the indication. After the indication, what are we expecting? Come on, all together in unison. After the indication, what are we expecting? Let's go.
Correction.
So all these 3 green candles could be considered as a correction. And if you're wicked and bad, this is what you would do. Okay. You would, see this imbalance in here previously. So let's rewind some more. And I'm going to show you how we get in, and we would have been killing the trade from early. Okay. So you would have already identified by that candle that there is an imbalance, and we're expecting to see a correction after this structure is broken. You would have dropped your time frame down. I'm going to drop all the way down to my 15-minute time frame. Okay. And you'd be expecting for that imbalance, which we've identified here, to be closed. I'm going to drop to my 5-minute time frame, even to get more wicked and bad, so I can give you a really nice entry. All right. So you'd be sitting there going, okay, I understand how this works. Indication, and then correction. Okay, have a look at it. Everything going to plan. What's the time? What's the time in there? 3 o'clock, 4 o'clock. Everything going to plan. 5 o'clock. Everything going to plan. This market closing up the imbalance, making higher highs and higher lows. If you was wicked and bad, you could have traded it up into that direction, because the market is a bullish market. And this is an impulse going in that direction. But when we got up into here, now we've closed that imbalance, you would now be looking for what we look for. And what do we look for? Come on, this is Fix It Friday, so I want participation, guys. Yeah? What do we look for at this point? What are we looking for to say, okay, we might be looking to get into this trade? Anybody know? I know that some people are traveling to work, etc., so I'll allow you. I know Breakfast Club's
break of structure.
You're looking for some sort of break of structure. You can't just get in because you drew a grey box here to say imbalance. When the market goes up, you just hit the button. You cannot. Have a look. I'm sitting there watching it now. My alert's gone off and I'm watching it and I'm waiting. I'm saying, okay. All right, I'm on a 5-minute time frame. And now definitely, I don't know if anybody else has got cataract, I'm not too sure, but I can see that something's changed in and around the area that I was interested in. Is closing this imbalance, pushed up here, even grabbed a little bit of liquidity above these little highs. Okay, nam. And then we've seen it coming down and breaking some structure. Let's have a look. Oh, but on a smaller time frame, I'm doing the exact same thing. I'm seeing an indication as it broke past this structure here. I'm waiting for some form of correction of it pushing back into these levels. All right, let me see, maybe 15-minute better. Could use the 15-minute time frame. I wanted to really use the 5-minute. Let's use the 5-minute. All right, I'm waiting for some sort of correction. At this point in time, I don't know where this correction may go. This correction may go 50% of this little impulse down here. Have a look at where 50% is over here. All right. I can see some imbalances all in these little levels here. Some imbalances in here. I'm gonna label this one 5 minute. You can see some other smaller imbalances prior. I do not know at this stage how keen the market is to start flying down. I do not know. But what I do know is if I see a retracement in this market close back down below, or I see it tap into a structural level, say for example up in here, let's have a look, see what happens. Boom, that market came, broke structure at this point in time. On the 5 minute time, I'm a bit upset. It's quite a quick move, okay? I'm upset by how quick the move was, pushing down, because ultimately, for educational purposes, this candle closed here, you'd have to place your stop. This would be the aggressive place to place your stop, all right? Last high. Really, I prefer you place your stop over here, all right? I was hoping that the market will push up a bit further into this level over here, but let's just see what happens. We're gonna place our stop, and this is what I love doing when we're doing a back testing, is we place our stops in the different options, because we've got the privy of being able to see what our actions would have done, what the results of our actions would have been. So if we was to go over here, aggressive stop above the last high, we can put that one in, and we can put in those two. All right, so let's play it forward and see what happens. Okay, we've got a safer stop over here. We've got an aggressive stop above this high. Okay, let's make this a little bit quicker. We've got a week. We hit the play button. In this instance, our aggressive stop was okay. Okay, but have a look. Where are we expecting this trade to go? All right, this is a good question. All right, so let me zoom out as it continues to play forward. The market's tapped into the top end of this range. Okay, and we started to break structure. Now, ultimately, I'm expecting this to get all the way at least to this blue line. All right, that's what I'm expecting it to get to. Obviously, if we're trading it, guys, and we're day traders, we will identify key structure, and those will be our targets. Okay, so key structure would be us looking to the left, because unfortunately we can't look to the right. We can't look in the future, and we'd be identifying these areas. So below these lows here would be a target, and we make it bright blue, and we make it a solid line. Would be a target. No, we'd be looking at these structural levels as targets. All right, there'll be targets that we'd be looking for. We've obviously we from our entry over here. If you can see, now I've zoomed in, this looks a bit, you can't see from our entry here, you know, we've hit our first target here for a lovely 1 to 2. And then the market's pushed back, make a little retracement, because we know when we make an indication below a low, we wait for a correction, and the market's really thinking about it going sideways. Look at this sideways action. Sideways. Let's hit play. Oh, target 2. Hit. Okay. So here we go. So in this instance, both of our stops, the guy who is very, very safe and the guy who's a bit more aggressive, both doing well. All right, both doing something. All right. Let's see if we continue to hit our targets. Oh, hit another target. Now let me ask the question. If you was in this trade doing very, very well, there's two ways you can get out of the trade. One is that you just got your TP and you're happy with it. This first trade is a 1 to 3.3 at the moment. This second trade is a 1 to 1.7, the very conservative stop all the way up here, okay? Now, the ways in which you can get out of this is either you just got your target, like I'm happy with my 1 to 3, I'm out, thank you very much, Bob's your uncle, Fanny's your aunt, you're gonna go about your business, all right? Or, if you wanted to stay in this trade for as long as possible, how is a way that you could manage this trade? Does anybody know how you could manage this trade, how you could stay in for the maximum, well not the maximum, but stay in for as long as possible? Does anybody know how? Based upon things I've taught in the past? Anybody know? If not, I want you to take note. For those people who don't know where they're in a good trade, they're too scared to shut it, they want to ride it as much as possible. There is a way you can ride it down just in case this market, especially if you can see a target which is quite low. Now that would always mean that you're not going to take the maximum amount out of the trade. What do I mean by that is that for you to get out of the trade, it has to invalidate itself and it has to break structure against you. So when it breaks structure against you, then obviously you've missed out on a little bit of profits. So say for example, if we're looking at this and we're saying this is a 15-minute time frame, which is very considerable, but it means that you're going to lose out on more potential profits. All right. Well, let's just use it for now. We can see that for this entire journey from all the way up here, have a look. The market never broke 15-minute structure, retraced and broke again. It only made lower lows and lower highs, lower lows and lower highs. Even here, when it broke this little structure here, made a slightly higher high, it didn't retrace and close back above it. So it only made lower lows, lower highs. Look, even when it came all the way down here, this never broke above it. It broke above it once, this level here. This is the first break, because this isn't a break here. But it never retraced and closed back above it. It went sideways and then continued its journey, making lower lows and lower highs, lower lows. So potentially you could stay in this trade until it breaks structure, like just now it's broken this minor structure. If it retraces and then closes back above it, then get out. All right, so let's see. Nope. Out. You'd be out here. Because the market broke this structure here once, broke, then retraced, did the hokey cokey, got everybody involved, and then this candle here closed above it and you're out. So so ultimately the point I'm making to you when you say you don't take everything is you could have taken here, but you actually closed out here. So you missed out on this bit of profit here. And that's just how you're never gonna take everything off the bone. All right, unless you've got a TP and this was your TP and it just came and wicked it, fantastic, and then you're out of the trade, fine. But for somebody else who's playing this strategy, the market came back up here, went sideways for a little bit, and then went like this. And you're like, oh, why didn't I stay in? And it went down for another 300 pips. Yeah? So I'd be out right here. Okay? And then I'm looking at this now and I'm thinking to myself, okay, the market broke some considerable structure. Yeah? And is it going to be making a big retracement now? Let's have a look. Okay, now the market's breaking other structure. So again, like I said to you, based upon what we were speaking about, I think we're going to come to present time. Have a look at the trend line. Why is this a trend line? Because I'm taking into consideration some data points. Let me get rid of all of these. It's getting a little bit mental. Get rid of all of these, get rid of all of these, get rid of all of these, get rid of that, get rid of this, clean up. True on YouTube now, we've got to make sure we tidy, all right? Clean up. Don't want no one saying that they can't understand my Soka charts. This is looking wild, all right? We're cleaning up. Okay, now let me get rid of that one. I'll get rid of these as well. Illustrate that we took a lovely profitable trade on that. That's fine. Now the market starts to break structure against us. Have a look. Where did I say that I thought that this should go to? At least over here to this blue line. All right, and just understand that these lines that I've drawn are just guides. As easy as they're lines, they could be like this. Ranges. It could be a little range, like this. Just like the top end could be a little range. I haven't drawn these lines very well, and I apologize how badly I've drawn the lines. But the point I'm making to you is that is close enough to that blue line for me here. It's close enough to turn around and say this to that blue line. And I'm now seeing it around here, turning around and breaking 1 hour, let me go to 4 hour, even breaking 4 hour structure. All right, so this is a considerable, look, it's breaking this little 4 hour level in here, boom. We might see a little retracement back into here, closing some imbalance that I can see. I can definitely see a little imbalance in here. Can you see the imbalance? I hope you can, hopefully you can. All right, we might see a little retracement back into here, boom. But it might decide to push back up into these levels. And where might it go to? Well, it might decide to go all the way back up into space and surpass these highs because it wants to keep coming up. But if this is the hard wall that is hit on the higher time frame, then maybe it's going to start deciding to make its way down to the other end of that hard wall down here. Maybe. All right. So let's have a look. This is backtesting, guys. Let's have a look. I love to be able to backtest and have a look historically to see what's been going on. All right. Because Therefore, you can see your concepts play out in front of you, where really in real time, it's a bit more difficult because you got to wait. Just imagine we can see this huge impulse of this market kind of push from up here. Oops. Push from up here. Oops, not good. Push from up here. Down here. Maybe the market's going to tap into this level in here and continue coming down. Or maybe the market's going to come down and tap into this imbalance and continue pushing up. Okay, let's have a look. The market surpassed our 50% area, all right, in this instance, and actually pushed all the way past the 618 area. Okay, no problem, it's fine. It's a bullish market. If we was looking at this on a day trader, we would, and we did actually retrace back into the imbalance. Have a look at where we retraced back into the imbalance. Have a look how that if we was trading this, as we saw it breaking structure for the buy. Have a look. Let me show you how you would get into this trade. Okay, once again, let me show you how you would get there and go into this trade. So I just want to show you guys how this market does the same things over and over and over and over again. The market pushed down here, made a lower point. The market pushed all the way up here and actually broke some structure over here. This little wick above here is a break of structure on a smaller time frame. All right, if I was trading on the hour time frame, that's different. I'll be waiting for a close. But this wick above this level here is a break of structure. Do you understand? Somebody got served at this price. Okay, and we've seen the market say, okay, that's giving us an indication the market wants to move in this direction. Let's play things forward. Boom! We are always looking for strength and speed. So as soon as that strength and speed is seen, we have to identify where did it break? What was it trying to break? Oops. What was it trying to break past where it needed strength and speed? I'm going to tell you what it's trying to break past. It was trying to break past all of these little bad man defenses over here that was stopping the market. They were all here posted up with their guns and their little tanks. Look, they were posted up over here with their guns and their tanks where they took up residence. And for this army to get past it, it has to say, listen, bro, listen, there's a serious force over there. We need to bring in the big guns. We are not going to get past that level unless we bring in the big guns. And you know what? They phoned Uncle JJ. JJ said, don't worry about that. I got you. I said, I got you. I bought in the big guns. I said, I got you. I just bought a new thing. It's a big, I don't know what this is called. I don't know what these army planes are called. I came in here and I got busy. Brrr, I went in hard. Completely carpet bombed this whole area. So get rid of these guys. Yeah. I'm a, what do you call them? I'm like a gun for hire. I came in, I just did the business. Smash. But when we smash past this level of where the battlefield was, Brenda, who is on the call this morning, she's the voice of reason. She's seen it too many times. She says, listen, you see the last place we had that big battle where we put in work? I think we need to go back over there and check to see that A, we've killed all the enemy, and B, we didn't leave any of our own soldiers there. We need to go and check the houses, the tunnels. We don't want these guys here mustering up their forces and coming up behind us to do us any damage. We don't want that. Well, you wouldn't want that if you was in the, you'd be a bit, think about it, if you was on the battlefield and you did a madness over here and then you press forward. So you're pointing in this, you're facing in this direction. Someone is going to be a bit wary that, what if these guys come back? What if we didn't get everybody and they come up behind us? Someone's going to be feeling like that. This is the way I'm explaining this to you guys. Probably never heard it explained to you in this way. This is how I'm explaining it to you. So Brenda convinces the whole army to turn around and go and investigate where they went hard and fast, zup, to make sure that they didn't leave anybody that could come and do them any damage or any of their own soldiers. Have a look. Straight back into that area. In this instance, Brenda just came and looked from close. They looked from around the battlefield. They didn't bother going all the houses, but they came back into that area. And trust me, have a look. If I drop my time frame down, I'm gonna drop all the way down to my 5 minute. Look at how when you get over here, all the soldiers just stood. They stood on the at the horizon at the mount and had a look. And then when they were done, they said, "Yeah, we're cool." They made their move out of here. They said, "You know what? Let's go about our business." Yeah. And in here was an entry. Okay. In here, it's not on the 5 minute time frame. It's not very visible, but it is on the 1 minute time frame. I can see it. All right. There's an entry to be able to get into that trade from here after the market tapped into this level and started to leave. All right. And the market left. The market left and push, and it does it every single time. So little things you could be looking out for. If I was a trader, I'd be looking out for where are these places where there's strength and speed. Yeah? Because wherever there's strength and speed, the market likes to come back and retest that area. Do you understand? The market comes back to that place, all right? So in this instance, we've come down to this level, boom, down here, and the market's now had a reaction, breaking structure, making higher highs, higher lows, and higher highs on the hour time frame. For all purposes, this market is now back in a bullish trend, pushing up like so. Okay, hindsight's a beautiful thing, but if he was here in November, you'd be thinking this market is pushing up bullishly up into these levels, but you would be pretty concerned that you're right up against this top end of this bigger range, which is premium. This whole market's very expensive, so you'll be concerned that at some point this market may decide to try and get back to the other end of the range. Have a look at the other end of the range. Yeah, so this is why we have these lines, and so you understand the larger picture of what may or may not be going on. All right, it's constantly zooming in and out and having a narrative. All right, so we've seen the market retrace. We've already said where might it retrace to. I think we said that already. Let's try and pull something out. 50% level is right about here where it is right now. I believe it retraced a bit higher. Now, why might it have retraced a bit higher? Because let me say, if you ever see a 50% level, which is here, that green line, but above it, you're seeing substantial imbalances, don't mug yourself and think to yourself that the market might not want to come and collect on these imbalances. If you're going to an area anyway, you're driving to Stratford anyway, you might as well swing past Alan's house and collect the money that he owes you. He lives in Stratford as well. Or maybe he lives a little bit past Stratford, he lives in Plaistow. You're like, it's only 5 minutes down the road, I might as well go get that money as well. So don't just think, there's the 50% level, it's going to stop right there. Always be concerned about this money going and collecting any change that is owed. Yeah, I got that money off Alan. Yeah, I did. All right. So in this market, as you can see here on this hour time frame, has only been making higher highs and higher lows and higher highs and higher lows and higher highs and higher lows and higher highs. And here we see it break structure once, but it doesn't retrace and close back below. So we're still bullish, yeah, until still pushing up pretty deep. We not only went and collected the money off Alan, we went shopping a little bit in Stratford, in Plaistow, all right? But here now we can see structure being broken, retracements, indication, correction, continuation. The market has turned around. Why is it coming down here if it was going to go back up to this blue line over here? Well, there's a reason. There could be a reason. Maybe this is just a retracement to tap back in here to go back up. Where would we be expecting a retracement to potentially 50% of that impulse, which is in and around here. Okay, then maybe it is going to go back up in here because it can work in both ways. We don't know yet where this market wants to break out of those two blue lines, yeah, or whether the market wants to push back up into. We don't know. We're trading what we see. Okay, but personally, I think we're in a premium. My energy would be like, yeah, this market's trying to turn around. and I'll be interested in getting in for the sell. This market broke structure, retraced, closed down below. Potentially on this, I'll be looking at like this. That's above the last hour swing high. Let's see what happens. Oh, hello. And wait, are we going to break this structure over here? This is swing structure to really tell me that we're turning a potential to. Oh, hello. This is looking good. Oh, hello. All right. So now my concerns have been confirmed. We got into an extreme premium and the market started breaking structure, made its retracement, and for all purposes now, this market is now trending down. It's now a bearish market, trending down within this or these white lines. It's that simple. It's watching and reading, reacting to what the market structure is doing. So we've got all our soldiers in here. We'd like to delete them. Well, let's get rid of all of our soldiers that we're having a little fight, the battlefield. Okay. The market, for all purposes, is trading down within this range. How did I get this bottom line white line? I just took this data point and this data point and pulled out a parallel line. But either way, I'm over the moon here. Another successful positive trade. 1 to what? 5.6, 1 to 6. Fantastic. Now, when we've got down to the bottom here, I am a bit concerned that the market might make a retracement. Retracement where? Well, possibly a retracement back to around this 50% of this impulse. And it could take ages. It could just fly up here really quickly. Or it could say, Jay, we're just going to make our way slowly over time back up into here before doing something else. I don't know. I do not know, but I'd like to be selling this market. I've seen it breaking some structure. Let's have a look and see what happens. Oh, this market accelerates in the direction that we want to go. So have a look. When this market was coming down here, in this trend, can you see? These are the data points touching the top, the top, the top, the top, the top, the top. For me to start buying this market, I would have wanted to see it break the trend, as I speak about many times. Man, I wearing straight jeans, and all of a sudden I'd like to see it making baggy jeans, but it didn't. We tapped into this level here. We made a retracement here, a lower low. Have a look. If I was looking at this on a smaller time, because I am looking at this on an hour, which is quite large. The market came up here, made a lower high. So I'm thinking to myself that we just tapped the end of this range and maybe we're going to go back up. It's possible. But then the market doesn't show me that. If I drop to my 50 minutes and make it clearer, the market doesn't show me that. The market taps here, makes a higher high, breaking structure. Remember what I said? Makes a retracement. This is an indication. Makes a retracement, correction, doesn't break back above. So if I was in this trade for the sell, I'd still be in because it didn't break back above. You see, it actually made a lower high and then a lower low and then a lower high. So for all purpose, this market is looking like it wants to continue bearish. All right. And if I wanted to, there is definitely an entry. There is an entry in here. All right. Do you want to see it? I'll show you it. I'm gonna drop my time frame down to my 5 minute. I'm gonna actually drop my time frame down for 3 minutes to make it clearer. Okay. Have a look. The market pushed up into this level, and then the market broke structure. This was a structural break. Here's structure. Broke that structure, closed below, made a retracement, then closed back down below. Even if you wanted to say that at this point here, there was a closure below. But if you wanted to be extra vigilant, you could wait till it broke outside of the trend line. Okay, so either here would be your entry. Aggressive stop would be above the last high. Safer stop would be above that high. Okay, let's just go aggressively. And then zoom. If you didn't want to take this one here because you're a bit concerned, you could have taken it when it broke outside of the trend line again as more confluence, because we were wearing straight jeans, now we're wearing baggy jeans again. And that would have been your entry. And from there, you would have seen the market tumble. But the point, once you can see what I'm telling you, And it's not like you just don't get what I'm showing you. Whether or not you would have caught all of these trades is something else. Once you can see it, the structure breaking, not making continuing with higher highs and higher lows, but making lower highs and lower lows and breaking outside of the trends that it keeps making. Once you can see it, you have the opportunity and the potential to catch these trades. It's that simple. You have the potential to catch these trades. And when would I have gotten out of this trade? Somebody say it out loud. If I was in this trade and I was killing, I was like, oh my God, this trade is killing it. I don't want to get out. I want to ride my winners. And have a look at the market. The market's never broken structure on the 5-minute time frame. Here, there's a little bit of structure. It broke. It never retraced and closed back above. Look at it, making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Never broke 5-minute structure. So personally, I'd be sitting there watching it, waiting to see the market break 5-minute structure and break again. Look, this is another structural point. I'm still in until we break this, retrace and break again. All right, let's have a look. It's moving a bit slow. Let's speed up. All right, so we've broken this structural level. I'm very concerned, okay, because I've missed out on these potential profits. Let's see if the market's going to retrace. This is a bit of a retracement now. It's going to close back above. Nope. Oh, I'm out. I'm out from this push. I'm out. And this is what I'm saying to you, that sometimes you're not going to be able to clean the ball with that strategy. But at the same time, unless this has hit a TP and a point of interest, let's have a look. If it hit a point of interest. Now, to be fair, I'm going to be honest with you. If I was in that much profits and I was really impressed by my profit, you did a low, all right? Area of interest, okay? If I was in that much profits and I was really excited, guys, there's nothing wrong with you being a scaredy cat and saying to yourself, as soon as we break 1 minute structure, retrace and close back above, I'm out. There's nothing wrong with you saying that. Because basically, what you're basically saying is that you don't want to give back anything. All right? But if that was the case, I wouldn't, 1 minute's a bit tight. I wouldn't potentially say 1 minute. I'd say maybe like around your 3-minute time frame. Because all you're doing is basically saying you don't want, because remember, if you say 5 minutes, 5 minutes is a longer time, or 15 minutes is a longer time for the market to retrace against you and to lose profits. I want to see like, I think I like 3 minutes. Yeah, 3 minutes, okay. Maybe even 2 minutes would have been great, but let's say 3 minutes. Because here you can see the market moving down nicely and not breaking structure, retracing and breaking again above. This isn't a close above. This is in line, okay? So on that basis, you would have been out at the point when this market broke here, retraced, closed back above. You would have been out here. And that's a bit more comfortable for me. Because you're out $2,000. You don't want to get out at 1,500, because if you get yourself right, that you potentially getting out over here was you getting out at 1,500. Where over you getting out over here was you getting out at 1,800, 1,850. Yeah, so there's nothing wrong with you dropping your time frame down when things are going in your favor. And as soon as you see a break, retrace and break again, which obviously is going to be a less of a distance on the smaller of the time frame. If you're waiting for a break, retracement and break again on an hour time frame, you're going to lose a lot of profits on as the market breaks for a whole hour, retraces for a whole hour, then closes all the way for a whole hour. You don't want to do that. All right, but let's see where we are in the present time of this, and then we'll finish up. Okay. We didn't even get to looking at any other pairs, or maybe we will. All right. So the market pushed up. Let's see where it pushed up to. Oh, have a look. Have a look at this. And this is the thing. This is tremendous bearish momentum. Something's going on. So you got out of your trade either here, whatever it may be, and have a look. You go to a 5-minute time frame. This is what I do. Right. Some people, they stay there. They're done for the day, which is fine. But if I can see this market was very, very bearish, look, have a look. This market's pushed up here. Now, structurally, on a 5-minute time frame, maybe this is a bit of structure, maybe here. The market came here, and at this point in time, the market is trading within here and here. Okay, understand what I'm saying. You can see this all in hindsight. But the market, when it came here, is trading within here and here. This was another level range between a swing high and a swing low. I'm going to rewind it so it makes more sense, okay? When the market came down here and started moving against you, even though you stopped yourself out because it broke, 2-minute structure, or whatever, maybe close, retrace, close out. Let's just say 5. Yeah, let's just say it broke 2-minute structure. It's not 5-minute structure. Here's a 5-minute high. The market's trading within here and here. When the market breaks outside of there, the market is now trading within here and here. Do you understand? This whole retracement, this is the football ground between here, this is the pitch between here and here. So when we get to this level, this is another landmark of seeing it break, retrace, and break above. So when I get to that level and I see the market push up here into these levels, because look, all this movement here is within here and here. So whatever that range is, this 65 pip range. Everything that's happening here is within the 65 pip range. Hokey cokey, all right? Have a look. When the market gets here and breaks above, okay, when the market gets here and breaks above, I'm interested to see, is the market going to retrace and close back above? Retrace, doesn't close back above. Meaning that it did not want to break outside of here and here. So when I start seeing this market now breaking structure, making lower lows and lower highs, broke this structure, making a lower high. As soon as we break outside of this level, we can be back in again. As soon as we've broken outside this level, making lower highs, lower lows and lower highs, you're gonna say, you know what? This thing is still rolling. Could do. Say this is still rolling. Especially as you've got a float now, you just made 1800. I mean, who cares if you go and put a little 100 on to see whether or not you're going to cream up some more? Broken structure once, I'm concerned. Yeah, if this retraces and closes back above, I'm out. Yeah, I'm out. Broke structure, retrace, close back above, I'm out. See? You see how you can manage your trade. You don't have to make it go and hit stop loss. It's broke structure. Here's a high. You're trying to cream up some more, be greedy. It retraced. It closed back above. You're out. No need for it to hit this stop loss. I closed myself out. Instead of at $100, I closed myself out at $60. It's not in the world for me. It just made $18.50. All right, I'm all right. See? And once again, this is on a 5-minute time frame. This is how we trade structure. Let's see where we are right now and see what's going on with this market right now. So we can see that we've come down and we've tapped into this yellow. Let's just zoom out. Yeah, we've tapped into the bottom of this impulse, this yellow impulse. We've tapped into the bottom of it, but this market is slightly making ever so slightly lower highs, and we've tapped into the top of the white range. I'm going to be anxiously watching to see whether or not this market price breaks outside of the trend of this yellow line now. It's the yellow line trend. All right, so let's get rid of some bits and pieces. I'm going to be anxiously waiting to see whether price is going to break outside of this yellow line trend. Now, I can see a reason why I might want to retrace first, because there's a huge imbalance, okay? So I'll be expecting from this yellow line some sort of retracement into this level, but then I'll be asking myself, wondering whether we're going to retrace and break outside this yellow trend, or whether we're going to push all the way back up into doing something. Let's have a look and see what happens. Doesn't even retrace. Doesn't even retrace. Pushes all the way back down here. Huge impulse down here, and you're thinking to yourself, oh, how would you have gotten into this trade? Because it's on a 4-hour candle. Let's rewind, because you wouldn't be looking at it on 4-hour candles. No one's got that kind of patience. Oh, I'm not going to say no one's got that kind of patience, but you wouldn't. All right, you'd be looking at smaller candles. Just drop down in here. The market came down into this level where we're thinking to ourselves, potentially we're going to make a kickback, and the market continued to make lower lows and lower highs, continue to trickle down, making lower lows and lower highs, and lower lows and lower highs. Okay. And it's on a 50-minute time frame. Would I be saying that you'd be in this trade? I'm trying to be realistic. I'm just going to say stuff for say sake. right down here, you're looking at this market and it is in a potential buy territory on this yellow line. I can't lie to you, it is. All right. But overall, coming from this sell area of this range here, that was respected. So ultimately, on this third, you are in sell territory. However, would you be in here for the buy after that long push down in here? Possibly not. If I was to be honest with you, I'd say possibly not. Okay, it's not going to be just saying, yeah, you'd be interested in getting in here. I want to be as true to form as possible. All right. Maybe you'd be looking on a smaller time frame as this market definitely starts making some sideways action. Have a look in here. I'd be looking at this on a smaller time frame, saying this market is sideways in here. Yeah, the market is sideways in here. And I suppose I'd be waiting to see this market break outside of this range. Okay, see where it breaks. Broke to the downside. Okay, on a 5-minute time frame, for me to have gotten in, realistically, I'd be waiting for some sort of retracement, maybe closing up some of these smaller imbalances. Okay, so if I was to identify them, we've seen a small imbalance in here, we've seen another one above here. Okay, I'll be waiting to see it close back into there to see some kind of change in direction. I'm just trying to see realistically, and we didn't get it. So for us to be realistic, would I have been in this extended push? Possibly not. Possibly not. And that, I believe, happened because of some news and the market was going for it. All right? Going for it. Yeah, it was last night when Alan was saying that the market's doing big stuff. Okay? So now, where are we? Now we have broken significant structure. We've tapped into our white line. We are 50% of this range in here, and I don't really want to guess what it's going to do from this 50%. I prefer that the market made a retracement back into these levels, and that retracement might go all the way back up into the 50% area. So 50% of this impulse is kind of in and around this area here, or we might see it come and collect that from that imbalance just above it. Once it gets up in there, I'll be watching market structure to see if we're breaking bearish, or if we're going to keep pushing up. If I was a betting man, I'd say we'd probably be breaking bearish from here to try and get down further, at least down to these equal lows, but ultimately to these white lines. That would be if I was a gambling man. From here right now, the market has pushed all the way down to these levels. And on a 15-minute time frame, we haven't broken any structure, okay? Because here is the last bit of 15-minute structure, then here, okay? All right, we've made this wick low down here on a smaller time frame. Let's go to a 5-minute time frame. We still haven't really broken any 5-minute significant structure. So ultimately, the market currently is trading within here. So ultimately, I'd like to see this market break outside of here, make some sort of correction, make some sort of continuation. But personally, I think I'd wait. Just let this market play out to see if it's going to come up in here and close up these imbalances and then potentially sell it down, get back in for the sell. That's my analysis of EJ. I will put an alert in here. It does look like it wants to break that, this level up in here and push up. Like I said to you, if you wanted to on a smaller time frame, you could potentially, because this market overall is bullish market, okay? And you could decide you want to buy into here, up into these levels, could do. All right, it's still lots of profits to be had from here up to this 50% level is 300 pips. So that will be the immediate trade that's on the cards. But you have to understand that ultimately the market's been making some bearish inclinations by breaking certain structure. So when you get up into these levels, move your stop loss or manage your trade accordingly. That's what I'd say with this one. I've got an alert in here. We'll see what happens. What's the time? We're going to have a quick glimpse at our GU because we have been watching GU quite closely. Let's have a quick glimpse at it. Remember today, guys, non-farm payroll. Okay? It's going to make things get hectic. We might see, let's have a look at the GU first and then we'll have a little chat about it. But also, see, whenever you're going and looking at, especially your indices or your GU pairs, it's good practice to go and have a look at the DXY, the dollar index. It's good practice to see what your opinions are in regards to whether the dollar has strength or weakness. Yeah, it's just good practice. Okay, now this is one I made earlier, and I'm just going to leave it there for time purposes. And I can see from here how I've identified some different ranges. So this dollar, as we can see, has been getting more expensive since the start of time. It's been bullish. Have a look. You see? All right. And we can see, if we're going to do the ping pong, you ready for the ping pong? Here's the ping pong. We can see that the market, blah, 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 then pinged, then ponged, and then pinged, then ponged. Or if you want to get rid of that one, you could just get rid of that one. Let me do it properly. We can see the market, ping, pong, ping, pong, ping, pong, and ever so slightly ping. I didn't want to include this one. But let's just do that. So maybe we're waiting for a pong to get down to this white line. Maybe we are waiting for a pong. All right, that's the first thing I'm going to say. Okay, cool. Maybe we're waiting for a pump. Next thing I'm going to say is we can see that from here to here, the market retraced to where? 50% of the impulse. Making me think that if this is a stairs, yeah, that maybe the market is, let me move my stairs over, maybe that this market is falling down stairs. Yeah? Maybe that's what it's leading me to think, that there's that bearish energy, and that was just a bullish retracement up to this 50% level. Okay? I am, however, a little bit concerned that we're at the bottom of this range that I drew in here, taking into consideration this data point and this data point. But I'm still 60-40 that we've got bearish energy in this market of this US dollar losing some strength, possibly. Because we can see some areas here that the market did not mitigate. Look at this imbalance. So don't get twisted. This market could decide that it wants to do this first. Because look, this retracement is possibly 50% of this impulse that broke structure. Have a look. Sitting right there on that 50% level. So we could also see this market as much as push back up into here to do some damage before doing something else. Especially when we see our manipulation M structure over here, yeah, and understanding that the market could come and retrace all the way back into that 786 level, or that golden zone, up into these levels here. Okay, so looking at this, we have to trade what we see, because at the moment we don't know, even though the market's tapped into the premium here, and we push that, we know there's been lots of reasons why this market, they've printed more money than they've ever printed in the last, they say 4 years, and they've ever printed. Like, they've gone crazy to drive the US dollar, to try and fight off all the attacks from all the other currencies and little tag teams that are coming together to try and kill the dollar, or move away from the dollar. All right. So this dollar index is kind of supercharged. Yeah. They robocopped it. Yeah. By pumping and doing all types of different policies to try and keep this dollar doing what it wants to do. And yes, inflation or rising interest rates is a way to control inflation, but rising interest rates gives strength to the currency, because people are able to get a higher rate of interest in that currency, so it makes it more desirable. All right. So at the moment, we will be trading what we see, and as we can see on the daily time frame, the market, have a look where we currently are. This market has had a reaction over here, and didn't quite close above this little wick high on the daily time frame. It didn't. And if we're going by our daily candles, the previous day candle range, which is between here and here, this is Wednesday, this candle closed bearish outside of the previous range. It gives the indication, the possibility that this next candle could also be a bearish candle closing outside of the previous range. So this previous range is going from here. Let me make it thin. And here, it gives it this candle closing outside of this previous range of this candle on Wednesday. This is Wednesday candle. Thursday's candle closing outside of Wednesday's candle low gives the impression that we could possibly see this candle be put in a lower low over here, lower than this high, possibly. And if that is the case, then maybe now, as it's coming in here and closing this imbalance, is the time when this market might decide to turn around and lose some strength and close below this level for the Friday. But non-farm payroll is today, and it throws an X into what's going on. Okay, it does throw an X, a spanner into the works. So this possibly losing strength. Let's have a look at GU. See what GU's doing. So on a daily time frame, this GU has pushed all the way up into the 618 area from here to here. I know that just because I've been looking at it, push the 618 area. And on a daily time frame, the market is still trading within a range. On a daily time frame, look, daily time frame, the market's trading within here and here. Or someone else might say around about here. And I'll say here, let's just say here. Market's trading within this box. Okay. On a 4-hour time frame, look. And I'd say, where is the highest point here? Let's delete that. On a 4-hour time frame, here is some structure, and the market's been breaking 4-hour structure. Broke it over here, retraced, closed back below, and it's having a little push in here, a little push down in here. Okay, so maybe we might see this market trade all the way down within here, but remember, it's still trading within that yellow line and this high over here. So are we going to break this level over here is the question? Or is this market going to, like, this is what we don't know. Okay, but we can see how 4-hour structure was broken here. This is 4-hour structure. This level over here broke that structure, closed below, made a retracement, closed back down below. For argument's sake, if you was taking 4-hour trades, that would have been your trade. Okay, taking into consideration a little imbalance above here, that would have been your trade. You'd have been up a little bit here at the moment. Okay, and nearly creeping to a 1-to-1 level. Okay. If you was to see what the market is currently doing on a 4-hour time frame, it's currently bearish, pushing down in some kind of range like so. Okay, when I'm looking left, is there anything that stands out to me? Look, if I use my little indicator, which is my fair value gap, just because I can't bother to write it myself, you can see it identifying these different imbalances that the market may reach for. Okay, so even if this market wants to go up, we might see this market reach. If remember what we said on the daily time frame. On the daily time frame, based upon what the previous candle's low was and where the candle closed, let's have a look. Daily, let's remind ourselves. So I didn't put in my lines. Okay. That was on the dollar index, in fact. Sorry, on this previous day, which is here, this candle did not close outside of the range. All right, so if we used to put a high and low of the range, it'd be looking like this. The candle didn't close outside the high and low range. So we don't really know what the market wants to do at the moment in GU in regards to that strategy of understanding what the previous candle was doing. Right? Yeah, FOMC literally today is, at the moment we're trading within this range. You could try and trade within this range, but FOMC could make this, can throw a spanner in the works because we don't know what the overall bias is. If I was turning around here trading it based upon what I can see here on this 1-hour time frame, on this 1-hour time frame, 4-hour time frame, I'll be saying, I'll be interested in looking to the sells until the market does something else. Okay, so right now, as we can see this market all the way down here, let me get rid of these little labels, which are annoying. Okay, I'll be saying that potentially this market was going sideways. It was going sideways in here. Okay, and we broke outside of there bearishly, maybe there's going to be an impulse to come and close these imbalances for the market to continue bearish. You know, if I had to say anything, that's what I'd say. Okay, so maybe we may see this market bounce and we might see a huge spike into here. It's not even that big. We might see it push down some more. At the moment, like I said to you, I'm not really too sure. I'm not in a hurry to get involved. I want to be selling this market. I do. I think the market is ready to come down here because of why? Because of my bigger bias. My bigger bias is the market is bearish, and we've pinged and ponged, and we've pinged, and I want to see a pong. All right. So I'll be always interested in the sell, but entry-wise, I'll be very cautious about entries today, based upon FOMC. Anything you want to say there, Al? Anything you want to say, Al?
Yeah. Non-farm payroll today.
Sorry, non-farm payroll. I keep saying FOMC.
Non-farm payroll. Very important today. There's going to be some mad moves today. As I said, it started already with the yen. The reason why the yen, I think I put something on the group. I believe the Japanese at last are going to do come out of negative interest rates. That is what they have basically alluded to. They've said, listen, you know what? This is what we're going to probably do. That's why the yen had strength yesterday, last night, and also it's good timing because as we know, there's interest rates next week. We got the Fed, the Bank of England, the ECB, and then the last one on the 19th is the yen. Reason why I say the yen's very important is the third or fourth largest economy, the Japanese economy in the world. So it's very, very, very important to the economic outlook. Today, though, non-farm payroll, there's going to be mad moves, as if the figure comes below the consensus, that means the indices will go up, and the dollar will weaken. Yeah, and if the non-farm payroll comes above consensus, means the dollar will strengthen, and there will be a sell-off of gold and sell-off of indices. Okay. 1:30 today. Any questions?
Very interesting. If I'm here, guys, jump in the room. We'll probably experience it ourselves and see what happens. So if you're available, jump in the room and we'll be here. All right. Well, guys, good morning. God bless. I'm going to, for those of you who watched it on YouTube,